Hey, good morning, everybody. It's Mark Johnson with Guaranteed Rate, and we'll be starting in just a few minutes. Thank you for tuning in. Today is October 28th, and we're talking about jumbo loans. So we'll give people just a few minutes to hop on, and then I'll start. I'm looking out my window. It's kind of a cloudy day today. Well, for the first time on my Thursday Thoughts, I'm ready to start on time. It is 11 a.m. here in Salt Lake City, Utah, and I lend primarily in the state of Utah, but I also lend in other states as well. Today, I want to talk about jumbo loans. My thoughts are about jumbo loans because with the increase in sales prices, we've seen a lot more demand for jumbo loans than we have ever before. And here at Guaranteed Rate, we're one of the largest jumbo lenders in the United States. With 43 years of experience, I know how to put together jumbo loans. I've been able to do it for many of my clients. And I want to just spend a few minutes just explaining what jumbo loans are. I want to talk about what the credit requirements are, the down payment, and then maybe what the interest rates and a few things that will help you understand jumbo loans just a little bit better. So first of all, what is a jumbo loan? Well, a jumbo loan is anything that exceeds the conventional conforming loan limit. Now, the maximum loan limits are set by the Federal Housing Finance Agency. This is an agency that governs and regulates Fannie Mae and Freddie Mac. This is the agency that will basically determine about once a year what the maximum sales prices or loan amount is going to be for those two agencies. Now, this year, they've already come out and said that the maximum loan amount for 2022 is going to be $625,000. Now, that's up from $548 to $50. That is the highest increase in loan amount increase that I've ever seen in my 43 years of lending here in the mortgage space. So right now, we can go ahead and originate and close loans at $625,000. And below that is considered conforming. Above 625 is considered jumbo loans. So it's important to note that loan amounts vary by state to state. In some states, they may have higher amounts. In some counties, they may have lower amounts. So make sure that you double check your state and your county. But that is kind of the normal amount, which would be 625. Now let's talk about documentation. Now everybody's talked about how it's just horrible. All the documentation that you need for a jumbo loan. Well, that's not necessarily true. But what I found is that people that are in the jumbo loan space, they are a little bit more trickier with their income and with their assets and where they're coming up with a down payment and how their income comes from this source and that source. Most of them are entrepreneurs or they own businesses and have income that is just not as easy to verify. So for those people that are in that category, you're going to have the same amount of income documentation that you would on a conforming loan. Now, what about credit? So for jumbo loans, jumbo lenders require higher FICO scores as they dig into a person's credit much more deeper than they would on a conforming loan. So they look at how long someone's had their credit open, how many accounts they have it, what their credit usage is, what the maximum debt is on each account, what the balances are. In other words, they'll look for any late payments, and it's crucial not to have any. If you do, it doesn't mean that you can't get a jumbo loan. It just means you're going to have to jump through some more paperwork. Typically, they want to have a really good explanation as to why maybe you were late on something. Most jumbo loans require at least a 700 FICO score. Now, there are many that go down to 680. And there are even a few that go down to as low as 660. Very few go below 680. So just plan that if you're below 700, the rates and the terms and the down payment is going to be different than somebody that has a 700 FICO score and above. So let's talk about down payments for a second. Many people think that you need to have 20% down for a jumbo loan. And that's just not the case. With jumbo investors, they go as low as 5%. They typically will scrutinize a 5% down loan heavily because it's a lot more risky to them. The more money you put down, the more secure the loan is for jumbo investors. So typically, you see more availability with 10 to 15% or 20% down on jumbo loans. Remember, the bigger the down payment, the better the credit, the better the terms, and the better the rates are on jumbo loans. Well, let's talk about PMI. If you put down less than 20%, just like conventional loans, chances are you're going to have to pay monthly private mortgage insurance. And it's the same as you would for a conventional loan. With jumbo loans, however, there are some loans that don't require PMI, but you're going to see that they're going to require a little bit higher interest rate on those. Now, many people always forget about cash reserves when it comes to jumbo loans. With conventional loans, you don't see this as a requirement so much, but it's typical for jumbo lenders to look for cash reserves after you close. Now, they can take, liquid money in like your retirement accounts or an investment account, and they typically want anywhere from 6 to 12 months of cash reserves so that if you had a tough month, you'd be able to dip into those reserves and make the payments on time. Now, that's typically based on your payments. So payments, they would look at principal and interest, taxes and insurance, and if there were any association dues as well. Most jumbo loans requires anywhere, like I said earlier, 6 to 12 months in reserves. Now, how do interest rates change or differ between jumbo loans and conforming loans? Now, like conventional loans, jumbo loan pricing is based on basically down payment, FICO scores, and your debt to income ratio. Occupancy, credit score, and overall debt of the income of the buyer is also taken into account. Many times the rate is the same or even sometimes lower on a jumbo loan than it is on a conforming loan. So I always suggest in locking in your interest rate at the time of application, because it's my experience that interest rates go up a lot faster than they come down. And right now I feel like we're in an increasing rate environment, so I always counsel my buyers to do that. Let's talk about occupancy for a few minutes here. Most loans are owner occupied, meaning that you will occupy that property within the next 60 days of closing as your principal residence. But there are other kinds of jumbo loans too as well. If you're thinking about buying an investment property, there are non-owner occupied loans available. Or if you're looking at a second home, say in St. George and you live here in Salt Lake, or maybe you live, in California and you want to buy a condo in Park City here. Jumbo loans they look at second homes like they do first owner-occupied homes, your primary residence homes. They do require you to basically owner-occupy that house. In other words, you don't give control or rent that out for at least 12 months. Now, many of them allow you to put that into like an Airbnb situation, but just make sure that you let your lender know so that we can double check our guidelines on what we can do as far as renting that property out on a Airbnb thing if you're buying it as a second home. I basically just went through very quickly some of the differences between jumbo loans and conventional loans. But if you have any questions whatsoever, don't hesitate to call me. And please like and share my channel here with others, especially if they're interested in jumbo loans. I appreciate you listening. And if you have any questions, give me a call. All right. Thank you very much. Have a great day.